center of this video's main discussion, which is going to be the EM markets and Asian charts. Just a couple of things that we go over on an everyday basis. I think everybody looks at what FIIs are doing, and they've essentially been selling in the cash market, I think, pretty consistently for the last 1 to 2 months, except for a few days here and there. And at least for the last week, that has been pretty much clear. But what they've also been doing is, since they have positions in the derivative markets, and I published that chart, if you look at this, the data that comes from NSE's website itself, and every day you can see them unwinding the index futures positions. Of course, there are days on which they've added it, like the last couple of days they were adding maybe 100-200 crores, but on other days they actually unwind, like they've sold off 1,127 crores worth of index futures. Now, to put it in light, essentially they were long around 250,000 contracts approximately in the month of April. By the end of May, half of that almost had been unwound, and then again in June, post expiration, it appeared like they were long, close to around 180,000 contracts, if I'm not wrong. And then again, that has been unwinding for the entire period since June, July, and now into August, and we are down to an almost nil position. So that's what I wanted to highlight. If we just look at this actual client and FII data that we track on a daily basis, even from 27th July with 134,000 contracts, we are down to 15,000. Last 2 days some buying, and now we are down to 10,000, which is almost near zero. They've almost unwound most of that long position, and it can mean one of two things. One is that essentially once they've unwound, maybe they would start buying again. That's one way of looking at it. The second one is that maybe they would go onto the short side, and the only time they did that was in 2013, where positions went from the long side to the short side, and it was also a period where you had this continuous unwinding like the one we are seeing right now. An important inflection point at which positions stand for these investors, and I think therefore for the market to really be watching. And with that, I'll just go on to the bank Nifty chart, and this is of course an hourly chart of the futures, Nifty futures, and my sense essentially has been that you can actually mark this fall as 5. The fifth is most interesting. In the futures chart, of course, this low has broken. It has broken in the BSE Bank Index, but not in the spot NSE Index. And what you have here is an ending structure. So I guess that's the fifth of that pattern, and you're getting some kind of a push up from there. It's not clear whether it's complete. You have waves A, maybe you could get a dip in B and then C. So as long as you've not really broken through the lows, there is room for various retracement levels to be achieved. Now, one of the indices that has circulated the market quite a bit has been this one. As you can see it on Twitter, people floating around a breakout in the MSCI Emerging Markets Index. Is it really true? And so what you really need to do when you're looking, what I don't know here is now, especially because it's an MSCI index, and they often have weightages to country sectors in whichever indices they actually create. And so as an EM index, if they're taking various indices, are they giving weightages to different countries, or is it an equally weighted index? And the reason I raise that doubt is that while you're looking at this big breakout, and it looks like a triangular pattern because you have a contracting lows and falling lows, and you're out of this. If I simply go over some of the Asian charts, which I'm going to do right now, then you actually don't see this breakout. And so that's why I raised the doubt that it's possible that there's an excess weight being given to some particular country, that it looks like the breakout is happening, and you really need to look at individual charts of various countries before you really consider that something like this has happened. So we probably need a better index, or maybe a look into how this one is really constructed. And with that, let's just look at what the the Hang Seng is doing. The Hang Seng essentially, so within Asia, Hong Kong. Now, when you look at this, you see something very similar, contracting highs and lows, but essentially you've just reached the upper end of this trend line resistance. So coming from 2007, hitting 2015, and then now we are there at 2017, and this picture continues across various other markets. So here's the Taiwan weighted. If I just zoom out a bit, you'll see there's this multi-year triangular structure here, which I can consider as a fourth. And the fifth is essentially not gone to an all-time record high as yet. But when you look at this entire period, what you see, a series of highs and lows, which again you can connect with trend lines, and you're at the upper end of this trend line. Of course, it doesn't take into account the 2008 period like in the previous chart, but many other indices do show that pattern. So let me go over to that. Thailand, again here we are able to take a period which starts from say 2013, connect all the trend line highs, and you essentially end up very close to pushing against this line for a possible breakout. If I really exact the trend line, this is how it would look. So it's making multiple attempts to actually break out of this range. Again, it's a contracting range and has a triangular look, but we're really not beyond that, and it's been like this for quite a while. Another Asian index, Jakarta, and so essentially a lot of this what I'm looking at is in Southeast Asia. Draw the trend lines of the highs and lows is a slightly rising range, but once again starting from 2013 you're at the trend line of the highs, and if you really zoom into it and you can actually picture some kind of a near-term trend, maybe it will actually break out of this upper line, but you'll have to see whether it sustains beyond this point or forms an ending and comes right back. So again it's trying to push against this trend line coming from 2013. Kuala Lumpur is a little different. Unlike those other charts, it doesn't have this structure that is multi-year. It does have a triangle built into the 2016-17 period. The triangle target is of course reached, but if you take a trend line from this all-time high that was reached in 2015, then that's exactly where you're being resisted right now. Philippines, again, you can do something like you did in some of the other Asian charts. Take a trend line of the highs and lows, you have a triangular structure into the 2015 to 2017 area, and you are essentially at the top end trying to test or break out of that range, or maybe top out at the upper end of the range. So that's what we're watching a similar pattern develop across most of these Asian markets. And then we have Singapore. This is of course the big run up in 2007. The index peaked. After that, if you've been reading my posts, I published this ending structure in Singapore and for the Straits Times index all the way into 2015. It did sell off from there. But here's the thing, again the same thing that I've been doing. If you draw a trend line from the highs, you actually not touch this line. I did think you would somehow manage to get there, and you did rally close enough to it. Price momentum is slowing down at the top end. Will we really manage this last push higher, or will we simply reverse from here? I don't know. We need to watch that. But essentially, we're coming pretty close to that line as far as Singapore, the Straits Times index is concerned. So, but once again, you notice on all of these charts, you don't have the breakout that you're seeing on the MSCI Emerging Markets Index. So why not some of the emerging markets themselves? Here is Brazil. This is 2008. Draw trend line of the highs, and we are coming pretty much close to that level now. Again, if you've been reading my posts, I was marking it as bearish all the way from this high that it made in 2010. It was the weakest performer with the rest of the commodity markets into 2015 when the dollar was rising. But since the dollar has been falling, it's benefited and managed to come right back. Is it really going to break past this range, or is it going to top out near the top end of this range? Well, we are very, very close to the top end, and once again, we're going to be seeing whether that resistance works out. And then look at Russia, moving on with the BRICS. Here you have the peak in 2008, 2011. Yes, in this case, the trend line is way, way above the level where the market itself is. And so you can either argue for a lot of room to move on the upside, but if I really take the near-term structure, which has been counter trend, it's essentially peaked at the upper end of this channel, failed to break out, and unless we develop a fresh rally to break out beyond this And if it does, then of course you can expect that it will try and go and test that line. And so Russia could end up being the odd market in this case. But so far, having failed from there, it has been making lower tops and bottoms, attempting once again to break out of this downward trend, but not yet having done so. China, of course, is a completely different chart. In fact, more often than not, it has not correlated with the rest of the world. So when the bearish dollar emerging market bull market took off, China was essentially still in a downward trend all the way into 2005, and that bull market started in 2001 for India and many other of the emerging markets. And so this started off in 2005. You had this big run up with the rest of the world into 2007. And then once that 2007 peak was done, I don't think we've gone retested these highs. We made this one breakout rally which occurred in 2015. In fact, 14-15. So that entire period you had this breakout from this range, but nothing of substance ever since. And once you had the secondary peak, it has again simply been languishing at these multiple peaks here after retracing. So, but it's really not gone back even to this high that it made in 2016. So essentially, it's at a much lower level. Looks like a corrective pattern. A retracement's being done. Maybe it could move from this upper end to the lower end of this range. And so China remains a market which is really not taken off or not even close to testing the trend line of the highs. So the only index or driver that could have actually, with sufficient weightage, been one of the indices that would have actually helped the MSCI index to make new highs would actually be India. So this is the Sensex. If I take 2008, we got past that range with this triangular development. And if I actually try to consider it as a rising trend line, then we're probably getting close to this point where, if you take 2008 to 2015, then yes, we'll get close to that, but nothing like what we are seeing in some of the other markets where they are more contracting ranges, whereas in this case, it's a much more steeper rising range. But essentially, it comes back to this chart, the MSCI Emerging Markets Index or any other emerging market index or Asia Index. If it's showing a breakout, it's really not there on any of the individual charts out there. So that's all in this update. Thank you.